Good morning. Welcome to the XM.com weekly market update. We're joined again by Pete McGuire, the CEO of XM. Pete, welcome back.
Good morning, Andrew.
Big week of data.
You bet.
There's data everywhere this week. So we'll start domestically. On the back of the Reserve Bank raising rates, Australian building approvals there month on month. The last few months have been negative, which is not surprising considering where the Reserve Bank is heading with interest rates and, the general mood on the street.
Yeah, absolutely. And we'll just have to wait and see where it is by Easter, if that's a continuation. Jury's out. We'll just see whether we see a bit of a turnaround if inflation numbers start to drop. So, it's hard to look forward and give an opinion or really an analysis because we haven't got the data, but that's not a good sign.
No, and the next slide as well with the private house approvals, a couple of months of negatives there, which it's a similar story. I think, as you say, the jury's probably still out. We're probably in a little bit of a holding pattern now domestically with the Reserve Bank not meeting again until February. So you still get the inflation numbers, obviously, but I think those numbers, it just tells us exactly what's going on out there at the moment.
Yeah, exactly right. And the other side, you've seen a lot of liquidations as far as big construction companies, and people are nervous on Main Street as far as building new homes and whether they sell now or is it, delay that settlement process for 6 or 12 months because they might find it cheaper, more tradesmen not working. So in turn, maybe those input costs are cheaper to build. That's all. It's a flick of the coin, but if you get it right, you can do very, very well.
Yeah, certainly can. And also domestically, the quarter-on-quarter GDP, once again, the numbers there aren't too bad. They're not shooting the lights out, but they're all heading in the right direction still. And the local economy is still, you would say, fairly resilient at the moment.
Yeah, you'd have to admit that. So we'll just see where we are again after Christmas sales, what happens in the new year, summer. I'm noticing more tourists on the streets, more every week I'm noticing it, which is a good sign. And there's less issues as far as staffing of cafes, restaurants, pubs, you name it. So maybe people are spending and that may certainly add to that GDP number.
Yeah, for sure. We go over to the Eurozone, pretty different story over there. So,
just a little bit.
Now, we've got obviously interest rates currently at 2%. The rate decision comes out later this week. The anticipation is to go to 2.5, which is clearly needed.
Absolutely. We've got the inflation story there and what's the what the mood is across that Euro's basket. We've got 4 central banks. I think we've got the Swiss this week. They've got inflation at 3%, and whether they only went from negative to actually positive rates, so they're even further behind the Eurozone. We've got the Bank of England and we've got the Fed. It's a full agenda.
It is, and plenty of other data on top of that as well.
Oh, CPI tonight out of the States.
Yeah, that's the big one. So once again in the Eurozone, we look at the PPI numbers there. They're big numbers. The CPI is hovering around that 10 to 11% mark. And you would sort of think it's going to stay fairly high for the foreseeable future in the Eurozone.
Yeah, it's just we're working through it. I don't think there's much comment on it. The chart tells the story and where we move forward. I mean, if that was to crater, but it's coming from, it hit that 40 handle or 42, 43. If that was to, by early next year or by Easter be at 10, then that's truly an issue. But hopefully that's not going to be the case.
Yeah, so it's plenty of work to do in the Eurozone, that's for sure. So heading over to the States, there's an interesting chart here. We look at the new home sales coming off significantly whilst the fixed year mortgage, which once again, most mortgages in the US are fixed. That's a big rise on that fixed rate mortgage.
Oh yeah, it's gone through the roof as you can see there and nearly approaching that 7 handle. The other side, I'm talking to realtors internationally and they're really cratering in the States because of new home sales and the impact it's having to their business models. So it's not a fun time to be a realtor in the States.
No. CPI, the big number, it comes out our time tonight. Once again, the US market had a very good night overnight, but that's probably more just clawing back what they lost last week.
Yes.
But you would think anything in that low to mid 7 range will be cheered on by the equity markets.
Yeah, and you'd have to think if they really shoot to the downside, then maybe Jay Powell goes, well, we're at 25 basis points. If it was to do the reversal, then maybe he looks at 75. So that's where, you're trading on a market. You know it better than anyone. It's hard to forecast. You either get it right or you get it wrong. And many traders, I think, wait for that decision, the prudent ones.
Yes.
If you game on, then you might make that decision now, go to bed and wake up Thursday.
Yeah, well, I think they're clearly not banking on it, but hoping for a low number.
You bet.
There's no way, and particularly with the way the equity markets have been this year and the money managers who would probably, most would be in the red.
Yep.
They want to claw back whatever they can in these final couple of weeks.
You bet. With Santa.
To gloss up their brochures to say, I didn't lose 10%, I only lost 5%, or whatever that number is. So that's what they would be hoping on. But as I said, this a lot of people have been waiting for this, and obviously on the back of that, the rate decision the following day. The final chart here, this gives us a look at the spreads between the 10 and the 2-year and the 10 and the 3-month.
Yep.
Pretty much over history. Once it's inverted, we hit a recession in the States.
Yep.
And you would think that's going to be the case sometime early in the new year.
Yep, I told you a couple of weeks back, I spoke to the guys on Bloomberg. I did another one with them on Friday, and they just keep on saying it's a 50-50 toss of the coin, you know. So that's their mood. That's the analysts and the anchors talking out of New York. So they haven't changed their viewpoint on that. And the story is, as I think you hit the nail on the head, maybe it's even a little bit better than 50-50. Maybe it's a 60-40 or a 66-33 that we go to recession. And that's not going to be a good sign for 23. I think 23 is going to offer many interesting trading opportunities.
Yeah. And I think if we look at over the back of 2022, there's all been about inflation and interest rates.
Yeah, and collapse of dollar.
Yeah, and that's been the clear story this year. Next year, I suspect it's going to be, well, obviously, it looks as though there could be a recession. How deep that will be, that's anyone's guess. But I think next year is very much going to be about company earnings.
Yes.
And how that has affected the earnings.
Well, that's the issue you face is with interest rates rising up, and you've got that S&P nearly at 4,000, so it's 20 to 1 as far as PE. Is it a fairer number to say, well, we should be closer to 36? We had a high of 4,800, so it's oscillated between those two numbers, 3,600 and 4,800. We sit at 4,000. I don't know, man. It's you know as well as I do, there's a risk-off game to say, mate, if I'm getting the money in the bank, interest rates are high, I'm just going to take a little bit of a break, sell my stock, and we'll come back in 6 months and review.
Write it out, yeah.
You need, you know as well as anyone, you need buyers to buy those sellers.
You're right. But it's interesting, those big, if the market's drifting off, those big up days in the equity markets, they have a huge bearing on your overall rate of return. And if you're out of the market in those big updates,
well, that's true too.
You know, it's what do they say? It's not timing the market; it's time in the market.
Yes.
Sometimes if you're prepared to ride it out, then I think come this time next year, you'd sort of think we'd be in hopefully a much better position. Yeah,
well, we're at 39.90, so 3,990. I just wanted to check that. The S&P 500, it was up 1.43%, so it was strongly bid up last night, and the Dow was even up at around about 1.58. So let's just see that Santa Claus, whether he keeps on chugging along, mate.
Maybe, but you might be right. They might if they get that rally, that might be enough to take some money off the table and reposition, but...
You never, God bless his soul, and I didn't listen to a lot of Rene Rivkin, but he did say one thing that I've never forgotten: you never go broke taking a profit.
No, that's true. Time will tell. Anyway, all right, Pete, thanks again.
We'll see you next week.
Right, thank you. And that's the XM.com weekly market update.